Welcome to Exchange Rates UK TV. It is the 15th of June, 2021, 1:07 p.m. Eastern Standard Time. Happy Tuesday, everyone. Taking a look at Bitcoin here on the 3-week chart, you can see that we are trading above the 3-week Kijun Sen and below the 3-week Tenkan Sen. Really, we've just got another kind of an inside bar here forming, where unless something changes, which it could, if we were to close around this value area today, we would close well below the 50% range of the prior 3-week candlestick. So just keep an eye on that. There is momentum shifting it lower on the 3-week chart, but let's just keep looking at the weekly and the daily for now. Weekly chart shows that this is the fourth. If it stays above the open, this could be the fourth consecutive weekly close above the open. This is the fifth consecutive week that we've traded below the Kijun Sen and the Tenkan Sen. And note that the Tenkan Sen is sloping lower, and it will eventually cross down. I guess it doesn't have to, but at the present, it looks like it will eventually cross down below the daily Kijun Sen, which is that by itself. That event is not any kind of significant event, but it usually is when it's been a while since the last cross occurred. And the last cross occurred on May 20th of 2011. That was the last time, 2020, sorry. That was the last time we saw the, actually, this is on the weekly chart. I take that back. The last time we saw a cross of the Tenkan Sen and Kijun Sen on the weekly chart was back in the week of May 11th. 2020. And if we project forward, how many weeks has that been? That's been 57 weeks, or we're in our 57th week since that's happened, or 400 days. So that's it's something to pay attention to, because again, moving average crossovers are not trade signals. But I have learned that when the Tenkan Sen and Kijun Sen cross on the daily chart and the weekly chart, and if it's been more than 90 days, that is usually a big deal. At least it's a huge warning sign of something to come, because you can also see that Senko span A is sloping down lower. So there's all these signs saying, hey, watch out. There could be some activity lower up ahead. And again, just watch out closely. The Fibonacci retracement levels, so the 382 is at 39,426, and the 50% levels at 33,792. Over the last 5 weeks, we've kind of traded the bulk of that time within that trading range, and just kind of yesterday evening and today we see it pushing up a little bit higher for Bitcoin. I want to note that in the last hour, there was in the 5-minute chart, I saw some big pushes higher, but then we saw it kind of get kind of wicked out there. So that's going to be interesting to watch and see what happens the rest of the day. But going to the daily chart and looking at what's happening. Oops, I want to go back to the weekly. Now we're looking at the daily. There is a cause for the bullish move here, because the lagging span, if it closes above the candlestick, the daily candlestick today, it will actually, here, think about it this way. As long as it closes above 37,325, we will have shifted into a possibility that we'll see a very nice setup for a bullish Ichimoku bullish breakout strategy known as a K-cross strategy. It's not a breakout strategy. K-cross strategy, that's an aggressive entry strategy within Ichimoku. And the only two things that we would need to fulfill that after the lagging span moves back above the candles is the Tenkan Sen needs to slope up, and the Senko span A needs to slope higher. Currently, that is not something that is happening yet. So just be on the lookout for that. Then look at the oscillators as well. Look at the percent B and look at the RSI. Look at the current slope of the line. It's pointed down quite a bit. It's hooking. Hooking is a early warning sign of trend of price change direction, and especially when it's pretty drastic. Now it can move higher here today and flatten out, and then it won't be as dramatic, but do pay attention to that. Also, there is some very clear hidden bearish divergence that exists on the chart. We have we have this lower high, and then we have a higher high. So we have lower high in the RSI, higher high in the composite index. That's hidden bearish divergence. That is telling us that it's giving us a heads up that any move higher may get stalled out, and we may continue the down move that we had initiated back in mid-May. So be on the lookout for that. Otherwise, I mean, it is easier for Bitcoin to move higher here because the volume profile thins out quite a bit, and then it actually gets a little thinner thicker as we move lower. So between where it's currently trading, between 40,500 and 35,800, it's harder to move down. Whereas currently, I mean, if you zoom out, you can see that there's a pretty good open space between 39,800 and 46,000, or we'll just say 47,000. There's a pretty wide open space in there, so look out for that. But otherwise, watch out for the hidden bearish divergence on the weekly chart, and but watch for any pop and fast move up and out of here as well. Thank you for watching. For all the shared exchange rates UK TV, please don't forget to like and subscribe.